Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have JJ Kinahan. He's a chief market strategist over at TD Ameritrade. We're going to take a look at the monthly IMX for May retail trading trends. JJ, it's great to have you with me. As always, now
Thanks,
you take
Jill.
a look at the 11.5 million actively traded accounts at TD Ameritrade. They were smart. They used May sell-off opportunities as a way to gain some exposure.
Yeah, and you know what? It's paid to be a buyer of the dips, right? And it was kind of interesting. We saw a 7% increase into, just under 7% increase into risk exposure from our clients. And they used IPOs, and they used, as you said, stocks that had sold off pretty significantly, such as a Tesla, et cetera, to, get their exposure, which is a little bit of difference from last month. Last month we saw our clients going more toward fixed income as the market sold off, and as the market finally did sell off, they just kind of switched back out to take a little bit more risk with some stocks.
I find it really interesting with the IPOs because typically retail investors will wait a couple of months to see where the stocks consolidate and find a range to trade these, but they went right into it as soon as they had the opportunity.
You know, it's really interesting, particularly Uber, and many people are like, well, hold on, this is a company that loses money, and why are your clients buying it? I think there's a couple of things that happened there. Number one, they saw Amazon was a company that lost money for a lot of time, and the stock continued to go higher. But just like Amazon, so many of the clients use the Uber service that they see potential there. Now, would I say to somebody you should put a lot of money into something that's doesn't have a profit? Of course not. But there seems to be a speculative part of everybody's portfolio, and these are the types of stocks that people like to buy with that. Maybe it's not their longer term holding, but it's something they want to have as part of their portfolio.
And millennials gravitated to cannabis stocks.
Not a surprise. We've seen that over the last couple of weeks, I should say couple of months. Again, they see the longer term potential. I would warn people that that's probably a longer term play because it's sort of a state by state issue. And as you know from reporting on other issues that happen in that way, it takes a longer time than you think it's going to in most cases.
All right, let's take a look at the net sales. Tech stocks, they were unloading a bit.
Well, Facebook leading the way, 6 months in a row. Jill, you and I have been talking about this, and why? Because they're in the sights a little bit of the government, and we know that when you are, that can have a longer term effect on the stock. There's all this talk about a breakup, et cetera. Either way, Facebook really for about the last 18 months has been in the government crosshairs one way or the other. It feels like it's going to continue. You have to remember this was also our number 2 held stock the last couple of years. So I think people have been able to take some profits on this and say, you know what, maybe it's time to lessen my exposure here for some of the other stocks that have potential.
All right, now longer term outlook, it seems as if macro headlines continue to drive trading and fundamentals are kind of quietly sitting behind the sidelines. And we saw that with the last quarter that just went past.
And again, I think the tariffs, you hit on something I think is important, and that is tariffs are almost artificially keeping us range bound, in my opinion. The reason being to the downside is that at FOMO, if you will, people are like, well, if tariffs are settled, we might get this quick bounce, as we just saw today with what happened with Mexico. You get a quick bounce. Well, if we get something settled with China, it may be a quicker bounce because the market likes to have some certainty. The other end of it is when we get to the high end of that range, people are like, well, just in case it either doesn't get settled or something bad happens, I don't want to commit fully. So it just seems that this is artificially going to keep us in a range for a while.
Well, I mean, it's got to be hard for corporate management to be able to give your forward-looking guidance and have some certainty within your numbers and understand how global trade is going to work.
You're hitting on a very important factor, and you can see when these CEOs are asked at their after they release earnings, at their conferences, some CEOs are asked about it and they say, we're going to manage our business with what we can control. And I think if CEOs in general, that's how they look at the world. If there are things, I'll make some adjustments and I'll plan on it, but I'm really going to manage to what I can control, and that's usually the sign of a good CEO. And they'll deal with other things as they continue to happen. But to manage is something that's taking longer than anybody expected. I think is really going to slow down business overall anyway.
All right, and how concerned are you with the fixed income markets?
It's built in now. I guess fear being that if the Fed doesn't do something, because these probabilities are just so high that they are going to do something. Anything over a 70 in a fixed income probability world is usually a certainty. You're looking at 90% probabilities that they do something. It seems like some of this may already be built in terms of expectations. The one thing that the conundrum of this, if you will, or the perverse logic is, if we're cutting rates, it's not for a good reason. So I struggle a little bit with the celebration around rates being
And
cut.
then what happens if there is a need to cut rates and we don't have any more to cut?
Exactly. You got to keep a bullet in the gun, so to speak. So we'll see what happens. I just question people who are so excited about rate cuts as to, do they really know the root cause of what that means? It means our economy is slowing. That's not necessarily a good thing.
All right, JJ, as always, thank you for joining me at
Thank you for having me, Jill.
And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.